We've said this many times in the past. Most of the money you make is when you buy. Now I know what you're thinking. Wealth Gambit, what does that even mean? The future of earnings of a stock is never guaranteed, although some are a lot better at hitting revenue estimates than others. What is certain though, is if a company that is generating $1 to $1.4 billion in revenue per year is selling at a market cap of around $5 to $6 billion with a book value around $4.5 billion. Warren Buffett is notorious for buying heavy when he thinks the markets are severely undervalued. And guess what? Apparently, according to sources, Warren has been buying heavy. It's no secret that Grandpa Buffett has his finger on the pulse of the market. Rumor has it that Warren Buffett reads around 6 hours per day and still dedicates 80% of his day to reading. Let's fast forward. 6 hours a day compounded over multiple decades and billions of dollars later. Is the Oracle of Omaha bullish on the market? We already know the Buffinator only buys when he feels things are either undervalued or at very fair prices. In 2008, when banks were falling apart and investors were biting their nails, Grandpa Buffett bought a whopping $5 billion of Goldman Sachs, and 3 years after, that $5 billion investment earned Warren's Berkshire Hathaway a profit of $3.7 billion.
It's raining money.
We're sure you've all heard the famous saying, be fearful when others are greedy and greedy when others are fearful. When stocks were once again falling, the Oracle of Omaha purchased $51 billion in equities and sold less than $10 billion. In this video, we'll go over the importance of Warren Buffett buying the dip, how it can affect the market and SoFi, and also Galileo's Mastercard partnership. The implications of what just happened are big, so make sure to stick around until the end and put your thinking cap on. We're not financial advisors, and this is not financial advice, so always do your own due diligence. By the way, ladies and gents, we've received a lot of comments asking about our Patreon with private SoFi Discord access. Funny enough, we actually just added some new features like a new options channel in Discord for those of you who like options. We here at Wealth Gambit do have some 2024 SoFi leaps. Unfortunately though, we have officially closed our Patreon and are not taking on any new Patreons at the moment. We also don't know when we'll be opening it back up. As soon as we have a definite date, we'll be sure to let you all know. Without further ado, let's get right into it.
People talk about a fog of war, but there's a fog of panic too. And during that panic, you're getting inaccurate information, you're hearing rumors. If you wait till you know everything, it's too late.
At a time when the Dow Jones fell off a cliff by 1,000 points and the Nasdaq dropped by 5% since 2020, a recap of what transpired during the 2008 economic crisis is a definite must to keep us sane. Let's take a look back at how Warren Buffett handled that situation and came out with a bag. A lot happened during the 2008 crisis. Wall Street was getting wrecked, people everywhere were losing money, and it affected everyone in one way or another. Two of the biggest bank failures in the US, with Wachovia and Washington Mutual, happened during this time as well. According to Treasury Secretary at the time, Hank Paulson, no relation to Donna Paulson. Kidding aside, Paulson said, "We needed something that was going to work much quicker and be more powerful. But what do you do and where do you go to fix this problem?" Luckily, this is where Grandpa Buffett entered the scene. Instead of buying the assets of the banks, Warren Buffett said it would make more sense to put more capital in the banks than it would to try and buy these assets. The CEOs of major banks teamed up like the Avengers and thought about the proposal. This involved John Mack of Morgan Stanley, Jamie Dimon of JP Morgan, Lloyd Blankfein of Goldman Sachs, John Tyne of Merrill Lynch, and Vikram Pandit of Citigroup. Though it seemed like it wasn't the best solution at the moment.
The US government had to do the right things, not perfect things, but generally the right things starting in September, and they did a fantastic job actually.
Even the former president George Bush said, but back to the present moment. What does this have to do with the current market conditions? As the current global financial market rattles investors' confidence, Grandpa Buffett is buying $51.1 billion worth of shares, finally deploying some of that massive pile of cash and putting it to work in this chaos. From $147 billion of cash on Berkshire Hathaway's balance sheet to now just $106.3 billion at the end of March. Does this mean Warren is bullish? It's hard to invest when the market is going down. It often feels like it's against human nature. But with Warren Buffett leading this frontal assault, it seems a lot more like a good time. Let's take a look at Grandpa Buffett's plan during inflation. Now that we all know that Warren just went on a shopping spree this quarter, you might be wondering, What made him buy that much? Could he just be following the saying?
Carpe diem.
Or seize the day? Now, Warren Buffeezy doesn't always buy the dips, but when he does, he's usually right. This is actually a great time to be alive for the bulls. Investors are scared of inflation and a huge sell-off is happening out in fear of a piling loss. According to Kiplinger, Warren put nearly 30% of Berkshire's massive cash pile to work in equities last quarter. That's the biggest splurge since the 2008 crash. This is the perfect example of buy low and sell high. But what about inflation exactly is driving our Grandpa Buffett's appetite for equities right now? Since 2008, Warren has been looking for the last big swing. After all, Warren is 91 years old. Berkshire has been building its massive cash reserves, looking for massive opportunity to deploy some of those reserves. Warren buying seems like a signal from the Oracle of Omaha that he feels that the companies he's bought into are undervalued or fairly priced. You may be thinking, Warren only deployed 30% of his cash pile. Is he really that bullish? Berkshire has insurance business that require them to keep massive amounts of cash on hand in case they need to pay for disasters.
I mean, for example, in our insurance business, we could have the world's or the country's #1 hurricane that it's ever had, but that doesn't preclude the fact we could have the biggest earthquake a month later. So we are not. We don't prepare ourselves for a single problem. We prepare ourselves for problems that sometimes create their own momentum.
So there you have it. Warren needs to keep a decent amount of cash just to be able to cover any disasters. After all, they have an insurance business, and that's what insurance does. According to Kiplinger, when inflation stayed dormant for more than a decade, Grandpa Buffett was prepping for this by just collecting cash, hoarding a pile of it from $75 to $147 billion. It makes sense now that he's putting about 30% of it to work when share prices keep falling and inflation's driving everyone crazy. It's a bold move that only our Grandpa Buffett can dare to do. Now this is the silver lining we're waiting for, fellow Sophian soldiers. As we hit the lowest of the lows, we have an opportunity to assess whether we want to buy the dip like Buffett. That decision only you, the investor, can make. We love to see investing OGs do what they do best, and that's buy when blood is on the streets. We were already buying this dip before Buffett joined the party. We will definitely try to do more now that Gramps has entered the battlefield. The dip might have felt like an endless loop of misery.
You are now in your very own hell loop. So, welcome to hell.
But it's actually making sense now that we're keeping up with the rising prices of everything that surrounds us. But speaking of fundamentals, SoFi gang, assemble. SoFi's tech leg, Galileo, made another major move, teaming up with Mastercard. Galileo announced a multi-year strategic alliance that focuses on accelerating digital transformation and improving access to financial opportunities for unbanked and underserved segments in Latin America and the Caribbean. According to sources, Galileo is now a preferred technology partner and fast issuer processor within the Mastercard partner network, Mastercard Engage, in both Latin America and the Caribbean. Galileo is under SoFi and it has 100 million end user accounts, while Mastercard has more than 100 million digital cards and 100 fintech alliances in Latin America and the Caribbean. If this ain't SoFi making a move to upgrade from the local spotlight, I don't know what is. When Warren was asked to give us a tip on his simple rule for investing during the financial crisis, this is what he said. What investors then need instead is an ability to both disregard mob fears or enthusiasms and to focus on a few simple fundamentals. A willingness to look unimaginative for a sustained period or even to look foolish is also essential. Shout out to the people who commented SoFi Turbo Lag. This means a lot. Also, a special shout out to everyone in our Patreon community. You guys truly help to make these videos possible, and we really appreciate all the support. We'll do our absolute best to provide the most value possible. Shout out to Arthur Magazu, Wei Chu, Pietro Serra, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzel, Shonda, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufrand, and Jay Bone. We appreciate all of your support. That wraps it up for today's video, guys. What do you think about Grandpa Buffett and his OG investment tips? Are you buying more SoFi? Smash that like button if you got any value from this video whatsoever. Until next time, peace.